Greetings, members, one and all of the Salivation Nation. The Dow Jones and gold and silver suffer after a Fed statement. Let's explore. You're looking at the prices now. Not a terrible dip, but a noticeable one, especially considering what was said by the Federal Reserve today. And gold prices remain under pressure. And this article here from Kitco, gold prices remain under pressure, but within their recent range as the Federal Reserve stands pat on monetary policy, even as it continues to signal that they're ready to do more if needed. Thursday, as expected, the Federal Reserve left interest rates unchanged at the zero-bound range, but noted that economic activity has moderated since its last meeting in December. The COVID-19 pandemic is causing tremendous human and economic hardships across the United States and around the world. The pace of the recovery in economic activity and employment has moderated in recent months, with weakness concentrated in the sectors most adversely affected by the pandemic. In the central bank's latest monetary policy statement, it continued to reiterate uncertainty in economic activity. However, it did not provide any new guidance on monetary policy. You may remember on this channel, we talked about how the Fed was saying that there's no way that they were going to make the rates go negative or below zero. But we know that that's an empty promise. So very well could see that, especially in this day and age. The path of the economy will depend significantly on the course of the virus, including progress in vaccinations. The ongoing public health crisis continues to weigh on economic activity, employment, and inflation, and poses considerable risk to the economic outlook, which was what it was mentioned in the statement. April gold futures last traded at $1849.30 an ounce, down 0.3% on the day. While economists and market analysts were not expecting to see any significant announcements from the Federal Reserve, speculation was growing that the central bank could start looking at yield curve control as U.S. bond yields continued to hover around 1%, their highest levels in a year. Avery Schenfeld, senior economist at CIBC, noted that the latest Fed decision was a non-event with nothing to see here. Of course, we knew there was no surprise that they weren't going to do anything with the rates at this point, but I'm telling you, they're probably wondering and looking down the road and possibly maybe even going lower and going negative with their rates like other countries have done. And they want to see more details of both fiscal stimulus and vaccinations before doing any rethinking. And maybe that's what they're holding out for. Letting Congress codify the easing of more quantitative fiscal stimulus out there. And we'll see what happens there. Includes keeping the funds rates on hold, maintaining the pace for its purchases of treasuries and agency bonds. Nothing for markets to react to here, he said, but the markets did react. Indeed, Dow Jones tumbles 700 points as Powell stresses long road to recovery. He said the short squeeze in focus. But there are some stocks that actually did well. This GameStop, I don't know what that is. An AMC stock soar for another day of wild trading. There's some speculation behind those. I've heard a little bit, but not a whole lot about it. But there's that information is here. The U.S. dollar strengthened, and that's what caused gold and silver to kind of hold back a bit, and we're down moderately on the day. Gold futures suffered a fifth consecutive session of declines, with strength in the U.S. dollar pressuring prices for dollar-denominated metal. You know, it makes you wonder, with the Dow Jones down as quickly as it is, usually when the markets react, the dollar reacts too in a negative manner. But in this way, it's up. Could this be the beginning of a deflationary period? Likely not, unless this continues and at a more rapid pace. Prices have made modest moves in electronic trading shortly after a statement by Federal Reserve on monetary policy in this article from MarketWatch. In a statement Wednesday, which came after the gold future prices settled for the session, the Fed held monetary policy steady, while noting that the sectors of the economy already damaged by the coronavirus pandemic are experiencing another round of pain. Seems to come in waves, does it not? But there are some states like California that are starting to open up, and other places as well that are opening up magically here after the election or the inauguration of Joe Biden. The Interest Rates Rate Committee also said that the pace of the economic recovery has moderated in recent months. It's an expected rate move or non-event here, essentially, but it's the statement that they said about the pain that we're experiencing could go for a while. And that is what's making at least the stock market nervous. Gold was pushed back and forth by strength in the dollar index, which is bearish, and a fall in the 10-year Treasury yield, which is bullish for the metals. Brian London, editor of Gold Newsletter, told MarketWatch. They're just the same kind of daily crosswinds that will create wiggles in gold's long-term uptrend. And I think that's really a great explanation of it, because I think, yeah, you have these little squeezes on the price, but overall, I think gold's going to go up from here. And I think these are gifts whenever we see the price dip down like it did today, but only slightly, because I think gold is going to eventually break out and come up above where we have been for the last couple of weeks here, months maybe, and maybe get back over $1,900 again, and maybe hold on past that level. We'll see where it plays out. But there, silver's down slightly too. Some of the factors that provide support for gold going forward are the lack of signs of a slowdown in reports of COVID-19 deaths and infections. Plotus Capital's Hatzigiannis told MarketWatch, until we see a positive report on the COVID front, then gold will stay choppy at this level. And indeed, and I think that's just it. And how long will it take? They're saying that it'll be summer before we see widespread vaccinations. And obviously there'll be a sector of us that are a little nervous about taking that shot or getting it. And but who knows? Who knows how much effect that will have? I've heard stories about people who have gotten the shot, even the second shot, and have come down with coronavirus, but it may take a while for it to really get into the system before it really protects you. And how long will it protect you? We're pushing, coming up on a year now since it really started to be talking about in a widespread manner. Seems like so long ago, but it just seems like yesterday as well. Copper and industrial metals are fundamentally bullish, according to MarketWatch here, according to Chintan Karnani. U.S. economic data releases point to a strong growth this quarter, and that's going to be good for base metals and industrial metals. And we'll see. So silver actually could ride that coattail, so to speak, in that development. We'll see how it plays out. But there's kind of your market report for today. What will the Dow Jones do tomorrow? And it is an unusual time for the Dow Jones to have such a big drop, and for gold and silver to as well fall, even if it's only slightly, because typically they react along with the markets, and the dollar index does too. But this is not the case today, because the dollar index is strengthening up, shoring up its position. But a lot of that really has to do with the strength of these other currencies and their economies, which are weaker. And so that's going to only bode well for the dollar. But it's a false sense of strength, in my view, because the dollar, well, they're about to just inject even more and more currency and dollars and liquidity into the markets. And where does it go? Mostly the stock market. It pumps it up, props it up. But the stock market has never gotten over being propped up over quantitative easing round 3. It's never really suffered the way that, in many ways, many people feel it should have under normal market conditions. But it's been anything where the manipulation is in the stock market, in my view, because that's where the liquidity is going. And a lot of that money is not circulating out there in the actual Main Street markets, which is really where it counts. Now, all of the economic impact monies, that stuff will be coming out, but what are people doing with that money? I don't know. Some people are buying, stuff that isn't really affected by inflation, like electronics and the like. But some of them, I'm sure, are meeting financial obligations, paying down debt, that type of thing, or just making ends meet. Some of them may be behind in some mortgage payments, and that'll cover about a mortgage payment for a lot of people. This economic impact statement or monies that are coming forward. So we'll see how it plays out. But there you have it. There's your report for today. Let me know your thoughts in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.